Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin, utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange market or using any of our software alert products, you should carefully and diligently consider your personal investment objectives, level of experience, and risk tolerance. There is a possibility that you could potentially sustain significant loss. You should not invest any capital or trade that you cannot afford to lose. It is your responsibility to be aware of and understand all risks associated with foreign exchange trading and to seek professional advice from an independent certified financial advisor if you have any doubts. Auvoria Prime does not exercise trading authority over your trades. You and you alone exercise discretionary trading authority over every trade.
So today is non-farm payroll Friday. You can see it too. See day 2 OPEC meeting in red folder. 8:30. You can see some red folders. U.S. dollar average hourly earnings minimum, non-farm payroll, employment change, unemployment rates. Those are big red folders. Those are big flags. And with being it's the U.S. dollar, it will probably affect a lot of indexes. It will also affect a lot of other currencies. So again, I try not to be in any trades around that 8:30 time period. And before that time, oftentimes you'll see there's going to be very narrow range trading. And then just before the announcement, you'll start seeing some big movements. And oftentimes a lot of whipsawing goes along. If you have a tight stop, it'll take your stop, get you in, take your stop all at the same time. And then it goes and does what it wants to do. So I usually just try and stay away from that. 9:30 on, nothing much major. That's going to be the main news of the day. And then, like I said, this is going to be a holiday weekend for the U.S. So Monday's going to be a banking holiday, so we will not be here on Monday. That's going to be all day on Monday. Then we'll be back to business as usual on Tuesday. That's the news there. Let's take a look at our heat map and see what's hot and what's not. And right now we have the Canadian dollar is the strong one, and the euro is the weak one. The dollar was weak. Well, that's your British pound, U.S. dollar, and euro. Those are the three weak ones. Canadian dollar and Swiss just was flipped over here. That's probably they're a little bit close together. But right now, I'll be looking to the strength of the Canadian dollar, weakness to the British pound, euro, and the U.S. dollar. And let's see. Let's go to.
There's my EuroCAD.
See what we have here on.
I'm going to check out EuroCAD real quick there, Al.
EuroCAD.
Yes, that seems to be the one that's...
Okay. EuroCAD.
I'm pulling mine up too. It looks like a strong move down. I don't know where it sits yet.
Looks like, and we're at our daily average range, EuroCAD, we're at 66 of the 71. So just about right at our full range for the day on the EuroCAD. But we'll take a look and see what we've got here.
I'm liking it.
And we have a red zone here. We have a green zone down here. It's coming right into the green zone. Let's do, put the moving averages on. And I like to call this Open Mic Friday. And so if anybody has any questions, comments, if you'd like us to turn your mics on, let us know, and we can do that. And gives everybody a chance to freely speak. I'd like to keep everything the topic at hand to trading if we can. But it's a little more casual today on Friday. So
however, if you do have any golf questions or anything like that, feel free to ask.
Yeah, there you go. So
I went ahead and took a market order on this thing.
Okay, so we're looking at now. We did have the CAD was strong, so we're looking at he's probably going to the short side. I'm going to guess.
Yep.
And here's a green zone right here. Here's our line. We've got 7 pips to the green zone. We're coming right into. I'm looking to see what the range is.
You broke the last previous low, so you have a new range at some point.
So I like this green zone here to this red zone here. See what the range is on this. And if let's see. There we go. And we have a range of roughly about 75, 50. It's over. I like seeing at least 50 pips on the range.
Yep.
So I'm not going to be looking at right now. We're at a downtrend on this one, but here's where the bottom of this is. Over here to the left is where where it's coming back to retest that range. So I'm going to take, and it's already broken this pivot, and it's already coming into the green zone. So I'm going to bring my Fibonacci from this point on up as it was going to trending up in the upside. So this is going to be my Fibonacci range.
What's strange about this, Al, is where that pivot is because I got in early enough, my target is before that.
This pivot here?
No, the other one, the one to your left. Yeah.
That's your target?
Just before that.
Just before that, which should be Probably this line right in here, about where it is right now, right where it bounced off of this.
That was the target low was 46.64, and my target is 46.68.
46 is right where my cursor is, and that's right. His target is right at the base of these bodies of these candles.
Mm-hmm.
The bodies of these candles.
A little aggressive, but
yeah. So here's the, and so we're looking at the zone right now. It shapes a rectangle. Here we go. Here's our bottom 25%. So it's in the lower 25% range right now. And I'm going to show something else here. I'm going to put something else on this just for illustration purposes once I get this thing done. Rectangle. Here we go.
My brain's going crazy today.
Here's the upper 25. Here's our middle zone right in here. Let me just tweak this thing up a little bit. We'll get these higher time frame zones built in here. I got my middle 3. There's the 1, 2. And here's the third one. And now we're good. Now we can take these fibs off. We have the upper zones. We have the middle zones drawn. I can take this fib off now. And we can see which way is for the downward direction as this thing's rocketing down into this lower green area. Take those off. And okay, now I'm going to come to we have our target zones. Here's a target zone down here. Actually, we have the green zone. I'm going to mark this green zone here a little bit, just so we know how deep this thing is gone as it proceeds into this green area. Here's the range right in here of the
Well, good morning, Christine.
Just mark that zone. Yeah, I talked to Christine yesterday. Good morning, Christine.
Very nice.
And so here's our bottom. So this is the area. This little dark area here. This would probably be how deep I would expect this thing to go. Let's go to a 5-minute chart and see where we are coming into this area. And we had a nice drop. We had a nice drop, a retrace, drop, a retrace. This is really the third wave of the big down move. I'm not going to be real anxious to take this trade coming down into this area. Now, Brian's a little bit more aggressive than I am in this particular case. If I go to a 1-minute chart, see if we have any pullbacks at all to give us a target into that zone, right? Because right now we're into that lower 25%. When you're in, this zone is fairly thick, so that's probably, there's some room to be able to take some trades in here. There's basically 12 pips. The whole zone is basically 12 pips till you get to this darker area. And you can see where it's this isn't a real aggressive downward move. It's going to rather slow sloping down. You could get your pips out of that. I'm not going to take this just because I don't like taking inside the lower 25. I wait for it to come out, come back in, find that higher low, and then look for these targets to be hit. So right now I say this is in the consolidation mode, especially with the non-farm payroll coming up. I'm going to be very careful about taking in anything right now. And
does non-farm affect Euro and CAD much?
It affects about everything. Anything that gets affected by the U.S. dollar, it would usually gets affected. We had it, so I would say yes, it will.
Now he's following his rules, and so whatever his rules are, that's and he's following them. That's a cool thing.
Yeah, and you have to make
mine are a little bit different. So.
And you have to make your own rules. And now I'm going to see something here. U.S. CAD. We have, but this U.S. CAD. Now I'm just going to mark some zones here that I've got. 124.69.
On the EuroCAD.
This is EuroCAD. Oh,
yeah.
Wrong one. EuroCAD. Let me get the EuroCAD up here. EuroCAD. I'm going to see some zones here on the EuroCAD. I just want to see how things overlay here a little bit.
And as he's doing that, he's mentioning the 25% range at the bottom and 25% range at the top. He's doing that from a Fibonacci retracement tool from his high to a low. when I'm looking at mine, it's still the same rules. The difference is that how he draws his fib lines is different than what I do. So current price is sitting right at 50 for me. It's not at the 23. As a matter of fact, my target is just above that 25%. So that's the only difference between Al and I is where does his fib numbers pull from? Still the same general rules though. Hopefully that made sense.
We have a 140, 146.51. 146.51, 146.51.
That's a green line. Are you putting fib numbers on there?
I am. That's what I'm doing. I'm just putting those 15-minute ranges.
And then you'll see why that I was okay with my 25%. 47.14 is your red. 46.51 is your green.
Yep. These are the fib ranges that we were talking about a little bit earlier. These are some other numbers that we have, and we're going to be. I'm just going to be overlaying them just revenue. I'll keep them in the blue color, but this is actually a fib range, a 15-minute fib range, right from here, and you can see where it's engulfing these three areas. This thing has potential coming all the way back down to this area right now, but I'm just going to use that for reference, and we'll just see how close it comes to those blue lines. We're just use them, just keep them there in the back of your mind, and we'll see how things work with that. It may not even come close to it today because of the
I don't think it's going to move that much
of the non-farm payroll. But let me put a fib line here, so you can see how this orange line came up real close to it, formed a nice red zone, and I would almost be willing to surmise that if we come here to the left of this blue to the blue line, let's just see where this thing happens. If there's anything over there, or you might see where there was a bounce of some sort. There's a little wick right down here. Bounce right off of that. I think that is a wick.
Yep.
Oh, well, no, maybe not. That may be the Fibonacci.
Further left it is.
Further left, way left. It must be a little way left. Yeah, you can see right here. Here's the wick right here coming right down into that area. So this zone does have some value to it. We could be possibly using this as another target area right down here in this bottom. This is where this is right here, and that's at 146.55. So, but we'll just use, again, we're just going to use that for reference. I'll keep it on the chart here just so you can see how these things play out here a little bit.
I'm assuming your RCS tool has changed a little bit.
The RCS probably did. Let's see.
Where the CAD's not quite as strong.
CAD has given up some weakness on the 15. Yep, it's like it was the strongest. Now it's the third strongest. Still strong on the 30-minute and the 1 hour, but it has given up some.
What's our number one strong?
Number one strong on the 15 is the Aussie. Aussie on the 15 and the CAD on the 30-minute.
Okay. Aussie, and what's the weakest across the board when you look at all the
British pound is, I would say, is the weaker one, although it is getting some, it's showing a pullback right now on the lower time frame. So anyway, let me take this off right now. Okay, so we're back to the normal business's hand. Here's the blue shaded areas, the lower 25. You can see it's pulling back a little bit on this right now. Now I am on this is on the 5-minute chart. If I go to the 1-minute chart, you'll see I've actually got a red zone and a green zone with a bounce off of the green zone. Right now it's coming right up into here. This is a little bit of a pullback move. From here to here, I would be looking at the pullback of the 50, somewhere between the 38 and the 50% retracement of this move. We're still in a downtrend. We're looking for pullbacks to keep on coming down short. So I'm now on the 1-minute chart. I'm looking to see where this thing left the green, one of my orange zones. It left it from here. So this was the pivot high. I'm going to redraw the Fibonacci from this down to here. And I'm looking for the retracement. The retracement box is going to be anywhere between the 23 to the 50, which is right at this red zone. We do have the flip of the green over the yellow. And so right now this thing is still bouncing off of this little zone right now, but we still have all the higher time frame, the 200 moving average is still way up here. We are getting across, it is crossing over all of the moving averages right now. So we have the green cross the yellow, cross the blue, cross the right now. They're all in the right direction for the up move, except we have this as a bounce point. So I'm going to draw the retracement zone that we're looking at, which is going to be right here. Looks like it's going to, I like it between the 23 and the 50. Looks like it may go higher than the 50 on this one right now. Here's the 23 zone right there. There's 23%. Here's the 50%. It worked right up to the 50% up. And so this zone right now is the zone in question. If it can break through, if it breaks and closes above the 60, then I'm thinking this thing is going to go up to either retest the upper 25 or it's going to start reversing. So we'll see where this thing comes. And right now I'll be looking at this thing. I'm still looking at it to be a short, but I need to see where it's going to give me a high to come back down to retest this level here. And right now the time, it's a Euro CAD. Time is right now at, we're still about 40 minutes from the announcement from the non-farm payroll report. But here we have from here to here, that's only 8 pips. Again, I like seeing 15 pips. I would like to see it come all the way up here to retest this upper 25% of this before I would take this thing short. Again, like I said, I like seeing 15 pips, so I'm just trying to get the 7 pips out of it. But we'll see how deep this thing goes. The deeper it goes, the more likely you are to be able to get into this trade. At the earliest I would be looking at getting in would be probably this 4681 area, which is right here at the 38% line. But right now, it's this thing, I don't want to be trying to pick the top of this. I want to see it come up, curl around, and then start giving a test to retest this zone. The problem is we have this little green zone right here, which is obviously, this is the point where the buyers came back in to start pushing it up. Now the question is, how high will it push it up before it comes back down to retest this area? Again, if it wasn't for non-farm payroll, I'd be more apt to maybe see how this thing goes. But we'll kind of watch it and just take it and see where.
Jump to your 15-minute chart.
15-minute chart. There we go.
And notice your last 3 candles before the current one.
All wicks. They're
all being pushed up at the my chart shows pushed up at the 38%. That doesn't mean it's not going to come down. It's just there's some buyers sitting at 46.75. Remember, that's a 46.75 is a quarters number, which is also the 38% for me. So it doesn't surprise me that it bounced there at all. It's just giving it enough room to do its thing. Now, if this candle will close the way it's looking now, then we have a possible reversal, because now you have a wick on the top side.
But it's not going to reverse right away, because look where the screen moving average is. Look where the yellow one is. These are all still pointing down. This tells me this is still kind of a pullback area, and it's probably going to come back and retest these bottom wicks that came in the bottom 3. So I still think that there's a good chance that this thing could come back down and penetrate that. It still shows to be more of a short position, a short play more so than a long play. The Canadian dollar is still losing some ground. It's showing as a pullback area to the, what is this, the euro?
Euro CAD,
The euro is still weak all across the board. The CAD is showing weakness across on this particular pair because the euro is starting to come back in a little bit, but the CAD is still dominant right now. So it came up, wicked above the green, wicked up, couldn't hold it. So this area right here, this level right here, this 46.84 area is a key price point. And the bottom of this is right now at 46.80. If I go to the 1-minute chart and see where 46.80 is, and the 46.80 is going to be right here at this blue moving average. So right now we have the cross of, we had the pivot low, came back out, it crossed over the arrow moving average, which tells me it's got some upward pressure. And we're going to see if it can close back down below here. It broke the 62, closed above. It broke the arrow moving average, closed above. Right now, everything's closing above these moving averages, which gives me rise to think this thing's more of an upward trend right now, as it's coming up into the upper on our lower time frame is coming up into here's the upper 25%, which is up in this area.
Obviously, 4682 is a key place because on my chart, it's a 50% line where the green moving average is on the 15, but on the 1 minute chart, the 4682 area is where the blue line's at and the price is above it. So that's a key area.
See, right now, this pivot high right here is still, we did not get a close above the 50% of this down move. So it's coming up, tested the 50% line. Now it's starting to form. Here's the move up. Here's a high. Here's a low. This is the pivot low we're going to be looking to see. Right now, this little zone right in here between this pivot high and this pivot low, this is where the playground is right now. We're going to see if it closes below this pivot low. If it does, it's probably coming down to retest. And if I were to do anything at all, I'd put a sell stop in right here at this line. And as it comes back down through the moving average and close, then try and get in and try and catch this little move. But again, for me, there's not enough room. From this line down to my target zone, we're only looking at 3 pips, and we're looking at almost a 2 pip spread on this pair. So the risk reward to me is just not enough to make it worthwhile. At least not when I know that there's a report coming out at 8:30. If I mismarked that on this chart here. Yeah, 8:30. So it's going to be right about 8:30 is going to be right probably. Let's get on a 15-minute chart. Let's go a 5-minute chart here so I can find this here. 10, 15, 20. So right here, this blue line is where this non-farm payroll report is going to be. I see maybe I'll grab a couple pips on this. We did get the close below on the 1 minute. I like to see a 5-minute close, but by the time you get that 5-minute close on here, it's going to be already pretty much, no, it may be well past our mark. See the green's coming up, hasn't crossed over the yellow. It does still have downward pressure. This has downward pressure. This one has downward pressure. But we know that we had all these bounces here. This is our range right now. And as we get closer and closer, it's going to be getting tighter and tighter. You know, figure if you had this move here and you had the retracement from this point down to where our shaded area was, there you had your 11 pips. That was enough to maybe pull out some of your range, your target. That's a 20 pip. This is a 20 pip move. Retrace back of the 20 pip move. You're looking at only came back 10 pips. By the time you get in, get your stop. Now it's going to have to make a lower low, but you got another green zone right down here. So that's what I don't like about that one. So let's move on to something else here. We can keep an eye on it, see what it does during the report. EuroCAD. We'll see how much the EuroCAD moves during the non-farm payroll report. In the meantime, anybody have any questions, any comments, anything that they would like to anything that they would like to ask questions of? I'll go move Christine over here since she's usually one of our panelists here.
She can help me watch.
She can help us watch, yep. Oh, there we go. Go to panelist. There she is. There you go. There's Christine. And I said she can help us watch the questions and answers here.
Okay.
And let's see. If anybody has any questions, anybody would like us to turn your mic on, just raise your hand and we'll turn your mic on. You can ask away if you don't want to type the question in. Try and keep it somewhat trading related and on target with what we're talking about in this room here. That's all I ask. And let's see if there's anything else coming on. Let's take a look at our German 30. We usually like trading that thing. Let's see where that is on the scheme of things. Here's a pivot high from yesterday's pivot high. Here's a pivot low. We're in the price in between. So you can see that here's the move up, came back down. Here's the middle of your M. Here's your right shoulder. Here's your upper trend line. And this thing is also making new all-time highs. But there's our trend line right there. We have our move up, pivot low. Here's our other. Now, if we take it from this to this pivot, made a little higher low still off of this big move. There's a trend. There's our higher time frame trend. Now, if it breaks this bottom trend line, we might have some room to the downside to this target here. That would be a $30 move, which is quite a bit for this pair. And we have a little higher. Here's a high. Here's a low. Here's a higher low. This one right here. I'm going to tweak this thing up just a little bit up to the bottom of that one. I said we have a little bit of a small little violation of the hit here, but the fact these are still a part of the trend line. Here's our wedge at the top. It's inside as it comes to the peak of this. It's going to be the break, but you have a nice big red zone up here. That's a pretty thick zone. It's a higher time frame from all the way over, way to the left. It hit the high here, hit a high here, and right now it's forming this little bit of a wedge. As I draw my Fibonacci's, I'll go from this one to here, and we'll see what the range is. And we can actually probably use this one too as well. That's how much range do we have here? We have that's a $98 move. We're looking at $5 moves. So I can use this for my main Fibonacci on this. This is on a 15-minute chart. We have the zone, and we mark this zone out.
What causes this to move so much? Because this looks crazy today.
This is basically the cash. Well, actually, this is the DAX, and this is a German Dow 30 is about the equivalent of Germany's Dow 30.
Okay.
It just moves, but it moves aggressively, but not over the top to where you can't, where it's so volatile that it whips you out a lot. It does. This is why this is the one that we just try to grab our $5 and just get out of it. It does have some good moves, but it does have some rather high volatility. And with this one, I generally only trade I don't usually do a 0.5. I usually try to do like a 0.05 on the for the lot size, and that's still plenty aggressive for my account size. So, but let me draw the fibs from here to here. I said this thing has been making new all-time highs. Come down to so this is my upper 25. You can see it's coming up into that zone. It came up to the halfway between, this is 11.8%. So this is our upper 25. There's that shaded area. Here's my lower 25. A lot of times when I have a strong trend and I see where it bounced off of the trend area, I'll just take it from the extreme of where that wedge starts, and then looking at those for my targets if there's enough room in here to take the trades. And there's some that still has $8 in between these, so that's still it's not a bad area to be in. And let's see. Oh crap! I forgot to do my moving averages here. There we go. Here's the low, here's the high. Put it right in here. A lot of 1 minute alerts here. We're not looking at those right now. Upper 25. Lower quarter. And then we have the middle ones right here. Here's the 38. Oops, I need to change my color back again. Horizontal line, orange. Trying to stay consistent with the colors so it doesn't confuse anybody. Orange is usually the higher time frame, and the blues are more of a lower time frame in the most part. Here's my Fibonacci range, have my shaded areas. I'm going to come back and redraw on a lower time frame. I'm just taking a quick survey here. How many people in the room are use TradingView? I'm going to see what kind of because if a lot of people are using TradingView, we'll start doing more charting on the TradingView. Until then, we'll just kind of keep it with the MT4. We know everybody's got MT4 pretty much, and but if people have TradingView, then we'll start using the TradingView chart a little bit more, maybe start splitting it up a little bit. So if you do have TradingView, you could put a little yes or something in your chat box so that we can see that. Sometimes TradingView, okay. TradingView does offer a free version. It only gives you 1 chart and 3 index capabilities, but for what we do, for most of our purposes, you could get by with that. And that way we could share some of the indicators we like to use. And it's just a much easier platform to work with. And so we have this little trend right down here. And we're working on seeing, looking to see what's going to work best for the people in our room. We're here to help accommodate you, help you to learn, and we want to make things as simple and as confusion-free as we can. Right now, again, this thing's going sideways. It's still a relatively tight range here for the last, let's see, we're on a five-minute chart. For about the last 30 candles, I see 20, so about the last, about an hour, about the last hour and a half, it's been trading within about a $14 range. Which is, I mean, it's tradable, but it's nothing I want to trade. I'd like to see a little bit more. I'd like to see a little bit more of a target area. Right now we have like a flat top here. We have this whole range right now seems to be it's hanging right around this upper 25, this upper target area from the zone. It came out of the zone, so waiting for it to come back in to retest. We do have a little bit of a trend going on, some rejection, pretty much right around this level. This little level right here. It hasn't broken the high of this line right here. It hasn't really closed up any higher than this one right over to the left. And we'll see if it breaks through this. This could be a little whipsaw area. It comes back down. If we get the range in between this area and this area is $13. So there is enough room, but we'd have to get a pretty good entry in order to make that happen. We have consolidation going on right now, and right now we're still 25 minutes from the non-farm payroll report announcement. So again, you can see where things are starting to get tighter and tighter, just staying in a range. If you go to some other charts, let's go with the US CAD. Let's see, what is that one doing here? Right now it's coming into it. We have a 5-minute close on that. What's right now, it's in a zone right here. Same thing. This thing's pretty range bound. That's a 24 pip range over the last hour and a half.
Wow.
A little bit more room, I think, but drop. Here's a little retrace, another drop, small little retrace, drop, bigger retrace. This one. So right now, it looks to me like this is that's this little area right up in here. No real clear direction on it. I guess, again, don't want to trade it. And see what else do we have. And we'll watch that US CAD and see how that plays out when the report comes in. We'll also look at the German 30 and see what that does too. Again, with the dollar being the world reserve currency, it does have an effect. The strength of the dollar has effect on everything when these reports come out. And nothing on this chart. Nothing on this one. Here's the US 30. This is our Dow Jones. This one will probably have an effect on the announcements. And those are all pre-market moves on the index. This one looks, again, this one we're looking at large dollar moves. $10 moves is nothing with a $34,000 price point. So if you're even looking at a 1% move, you're looking at probably at least a $300 move just for 1% of the range of the index. And right now, between red zone and green zone, you have about $30, about $30 range. Again, very tight, and it'll stay that way probably for the next 25 minutes. Let's see, moving average. Anybody have anything they want to take a look at?
Show your RCS tool again.
Okay.
Okay, so there's no real color across the board that's strong.
CAD's strong. CAD's strong. CAD's giving up a little bit here, but still maintain the strength here. The CAD and the euro are still strong. CAD and the euro. This is the 1 hour time frame up here, the upper left. Here's the 30-minute, the lower left, and the 15-minute. CAD's still strong to the euro, so we still want to be trading to the strength of the Canadian dollar to the euro. You can see that again, it's still strong, although it used to be up here. Now it's pulled back. This is the pullback. So as the euro and the Canadian dollar are pulling back, you'll start seeing this thing. You could see this thing flip where the euro becomes stronger. Once it gets stronger over here, and then it flips back again and it goes in the same direction, then you know the retracement is pretty much over, and now you can start trading in the same direction, having the wind to your back with the Canadian dollar. So again, let's take a look at the CAD euro. Let's go to
which is still flat. I mean, it's
euro CAD right here. 1 minute. There's so this thing is you can see this thing is not doing a whole lot of. It's not making any type of committed move either way. It's just sort of bouncing back and forth. And again, I think it's waiting for the announcement. We'll watch this when the announcement happens. Being that these two are non-U.S. pairs, just see how the dollar announcement affects the other currencies. You might be able to see a little bit on that. Remember, the Canadian dollar is also, it's an oil related. So as the price of oil gets more expensive, the Canadian dollar is going to be getting stronger.
interesting look on euro yen. Of course, you pull your lines differently than I do, so it's not going to be quite as interesting to you.
Euro yen, moving averages.
So when you're looking at the euro yen, there is a red fib line at 31.72. It has not been able to close below that. That's right where it's at. It has not been able to go below that, which means it's, for me, that's in the bottom 25%. I can't do anything with it. But if it closes below that 131.72, then I have the opportunity.
72, you say?
That's your red fib line. The cool thing about this one, just looking at it,
131. That's all the way down below here.
No, it's right where your gray line is.
Oh, is it? Oh, is that right where where this one is?
That's where price is at. Yeah.
Oh, wow. Okay.
Price cannot.
Right, yeah.
It's had 3 15-minute candles where it could not close below that number. The cool thing about it is if you see that basing area right where our arrow alert was given, that price is between 131.81 and 131.86, which is your 38 and 23% on your fibs. and it's just hanging right there, just like you would expect it to.
See, if I were to draw these fibs on this, I'd be using this range right over here from the left to the high, because prices in between that. Here's yesterday's high, here's yesterday's low. And if I can use the previous day's high and low for my range, I usually do that if there's enough range there. That's usually my first go-to area. So I go from the low to the high, find my zones. Here's the upper 25, right there. Here's my lower 25, right here, encompassing the green zone.
Mm-hmm.
That's not by happenstance. That's just the way things always generally work out. Here's my middle third, target 1. Actually, in this case, this would be target 3. This is target 1 down here. This line right here, the 61.8. This would be the target 1. As it bounces out of the zone, this would be the first target, second target, third target.
If you're taking it long.
If you're taking it long, and I'm marking these zones. I'm marking now would be the targets for once it bounces out of this lower 25 to come up to retest this one. But it's going to come up, fall into this area somewhere. It may bounce back again. Give us a higher low, come back and retest these, and then go up and test this. Then it comes back down, test this one, comes back up, test these 3, maybe goes down to the lower one. But this is where you're going to start seeing the bouncing between this upper zone, the lower zone. If you're a swing trader, you'll just take it, comes into this zone, take your trade, take your buy, and try and sell it up here, knowing that this is the range is going sideways. That's just, but you have to be, you'll be waiting all day, maybe all weekend, for this thing to come back up to retest this area. But I just draw these zones, find the lower 25, find the middle zones, and then I come and I go to my, and then look and see, wait for the bounce to come out and start taking it long on trend as it starts trending its way to the upside. And that's basically all we really do. And find out where the 2 extremes are, and then wait for it to bounce out of the extremes and work its way back into the middle. That's pretty much it in a nutshell. So then I come to my higher time frame zones marked. I'm going to come into a 5-minute chart, and a 1-minute chart is generally where I look at. I'll expand it out. Our moving averages are still haven't crossed here. It'd be nice. It's nice if you can get the moving averages to start crossing to come on the upside, and then wait for the pullback. But right now, here's the low. Now this thing could come out and still go lower. We don't really know for sure what that's. This thing is still trending to the downside. We're looking for bounces, but we're already in that lower 25% area. So I'm looking for it to come out of that area, maybe retest. And you got a little red zone right in here. Maybe for it to retest that and then come back in and give us a higher low. But here's a low. Give us a higher low on the retracement as it comes back in. So we're looking for a move up, somewhere up into here. Have it come back, and usually it needs to be a strong move. Obviously, a strong move up. Come back down, retest. Marking this low, have a higher low. And then I'm starting to look to see for the next push up for the retracement as it works its way up into this area. So from here to here, you've got there's 12, almost 13 pips. That's enough room to take it. And if you can break this thing down into thirds, you can find out where there's some little zones right in between here that are always worth looking at. But this would be the move up, wait for the pullback, and then start looking at to start trending up to gets up into this area. By that time, all the moving averages would start to consolidate. Go to your 1-minute chart and look for the same formation here. You can see that here's the low. You can see it came back down, retested this low, but it couldn't break. It did not break 1 pip lower than this low candle here. So right now, it tried to come out. We did have the cross of the moving averages. At this point, I'm really okay. It made an attempt to come out, was rejected, made a higher low here. Now I can actually start using this trend, this Fibonacci from this point, see where it comes up, see how high it goes. And I'm going to see it may go up to, well, we were projecting if I go up to this area right here and look at where the 50% line, this is the little dots, 50% of this move. It would not surprise me at all to see this thing come up to retest that 50%. Have a pullback. Right now, we don't know where that's going to be, but I want to see at least come out of this. I want to see at least come out of this zone again. And then look for my target zones with the 23 to the 50% of this upper move.
Do you go back and think about the momentum that you're showing on the RCS tool?
Then I will, before I take the trade, I'll go back to the RCS tool. And so right now we're on the Euro Yen. So the Yen is fairly strong. The Euro is still weak. We have a 5 and a 1. So there's a 4-point spread there. Here's the Yen and the Euro. There's a 4-point spread there. Here's the Yen and the Euro. Only 2-point. This is on our retracement range. So right now, we still be trading to the strength of the Yen to the Euro.
Excuse me, Al.
Yes, Christine.
There are several people that are inquiring about the RCS tool.
The RCS tool. The RCS tool. If you have TradingView or if you have a free version of the TradingView, it doesn't matter. Email us at trademasters.com.
Trademasters@gmail.com.
Yeah, thank you. Yeah, trademasters@gmail.com. If you have TradingView, and we can give you a version to be able to use. So I'm not sure how long it's going to be free, but for right now, it's been free for several months. I'm not seeing that changing anytime real soon here. And let's see what else. How did I get Letitia in here? Letitia?
I don't know.
I think that was a mistake. I'm sorry, Letitia. Let me push you back over into the attendees here. Maybe I'll put on control to attendee. There we go. And back over to our attendee. There we go. The RCS, yes, if you have at Trademasters at Gmail, and that's trade. I mean, in fact,
I'll put it in the chat box.
Yeah, put it in the chat box. Trademasters, and it's not misspelled. It is with a TRAID. So it was more of a. That's what we could do for the our website that we had, and but it also gives us the AI is basically for artificial intelligence. So that would be fitting as well. So that's not a misspelling. But anyway, right now you can see we're on the CAD. We were on the CAD yen, and the yen was the CAD yen? Is that what we were looking at?
We were looking at Euro Yen.
Euro yen. That's right. Thank you. It's still the yen is still strong. It is giving up a little bit of the strength. It's right now the yen is right in the middle, and now you see it's flipped over here right now. That on the lower time frame, the euro now got stronger to the yen. So let's go back over to our chart and see what's happening here. We have a nice little pullback. Here's a pull back out. Now we already had the retracement. It didn't quite get out. Came back and retraced. So we did find the buyers in here. We do have a green zone. Now I'm looking for a pullback. Here's the high. Now this is a pivot high, and also we are only 10 minutes away from an announcement. So again, I'm not taking any trade within 15 minutes of that annount for sure.
I don't know why. I think you should go ahead and be very aggressive today.
And I usually wait about 30 minutes after the announcement before I go back in again. So
let's celebrate with fireworks, dude.
Yeah, there we go. So right now we have the high. We have a pull. I'm going to be looking for a pullback into around this 23 to 50. Now, the fact that this is the first pullback, well, actually, this is the second one. Here's the first one. Here's the first wave, second wave. And you're going to probably see that the distance between this one and this one should be exceeded by the distance from this one. This would be the third wave. So here this would be wave one. If we're talking Elliott waves, and this is another thing that we pay attention to. We don't trade it particularly, but we do pay attention to it. Here's the pullback. So this would be wave two. Wave two cannot go beyond the beginning of wave one. And then wave three should be from the pullback, wave 3 should not be any less than the length of wave 1. Move this thing over to where the bottom of this was. You can see this has already been exceeded, broke it, new high, and now we're looking for, this would be a secondary, so that would be wave 3. Wave 4 would be the pullback, and then it should go up to a wave 5. So you have wave 1, 2, 3, pullback 4, 5, and then we start looking at, we're probably going to be coming up to looking at this low point right up in here. Here's our high, and we're going to check in our zones down below. And we're looking here, the 23% pullback. Here's the 23 to the 50. I expect this one's probably going to pull back a little bit harder. As long as it stays within this 23 to 60 range and comes back out, it's probably going to make a new high. Depending on how deep it pulls back. Right now it's pulled back to the 50 line, have a wick, did not close. The target, the upward target would be up in this area, the 50 to the 38 over extension. And we're just going to watch this thing during the announcement, see if how close this thing comes to these markers. So it pulled back to the 50% line. The target would be the 50% line. And I usually just take the more conservative side, where I take the 50 to the 38. So this would be the zone that I would expect this thing. If this thing pulls up, I would expect it to come up into, and also you have your moving average coming right down into that same area. Comes back up. You have the traders that trade moving averages, they're going to be looking at that zone. People that trade Fibonacci's are going to be looking at this zone. People that trade Elliott wave are going to be looking at that zone. And as I move this area, this one here, I can take this one, see where the pullback is, and it'd be looking at this little area right in here. Mark it down. I'm going to mark it right to the top of that, and we'll see how close it comes. I do think this thing has room to the upside. Now the euro was getting stronger to the yen on the lower time frames. You can see right now the euro is the yen is down here. The euro is up. These things flip, so the euro is now gotten strength on the lower time frame. The yen is still strong. The euro is still weak. So this thing could be this is a retracement area where the yen's getting stronger. It's retracing to this down move. And we are right now about 6 minutes from the announcement. Now, on the lower time frame, the euro is stronger. That's where this pullback is coming in. And I think now it almost be willing to assume that when the announcement happens, this thing's going to come down and just come back down and probably retest this zone. This is really the first really strong push where it came out of the 25, came back up, still looking for a higher low, probably somewhere right around in this area. My moving average up. I'll take this thing off right now. And now the new zone that we have down here, here's the 25, here's the 23% retracement, here's my 50. You can see as this point went up higher, it's still coming in the same area where this pullback was, where this before this next move up. Yeah, another 4 minutes. Any questions so far? Have we lost anybody?
No. You don't hear.
And like I said, we're here for you. We're here for you to help get you guys to be able to be technical traders, to be able to see the how to trade price action. And we're here to try and make things as clear to you as we can. If we're not doing our job, and so we need to get, sometimes need a little bit of feedback, just see how we're doing. So we don't know what we don't know.
We don't at all. Heck, and when we know, we aren't sure we really do.
Right now, here's our pivot high. See a nice little pivot. Here's a nice slow pullback right into this area. And we'll see how, and we're right now 3 minutes from the announcement. You'll start seeing some big price moves within about 5 minutes of the announcement. Some people out there, somebody out there, some institutions out there know what that announcement is going to be, and they're already taking the position for that.
There's a nice, interesting book called Dark Pools, if you ever want to read it, about institutional stuff. Very interesting. All manipulated.
And all we're trying to do is we're just trying to be this little pilot fish getting the nibbles from the big whale above us. We're just trying to get just a little bit of that piece of the pie. We don't need the big runs. If you get enough small pieces, you still have a belly full.
Are these insinuations that I'm getting fat?
Your words, not mine.
You implied it.
Oh, Al,
Yes.
someone Carol requested if you could look at the cat Swiss.
The cat Swiss.
Ricky said the Euro Aussie just went up.
So we went to cat Swiss or Euro Aussie? Which one do you want here?
I'll look at Euro Aussie. You look at CAD Swiss. I don't have CAD
Okay.
Swiss. Ooh, yeah.
Cat Swiss.
I would think that would have to be the Euro Aussie had to be some news item to have that kind of a candle just happen. Yeah, that's got to be news based.
We have lots of consolidation right here. Here's our range. Here's our yesterday's high. Here's our overnight low, which is right here at the low of the day. So here's our range. And this was a down move. Our target's going to be to the upside. And so here's my last point, leaving the red zone. Going down here to the pivot low. And we can actually take it to
this euro is going nuts right now. The Euro Aussies. You need to take a look at that.
Euro Aussie.
Yes, all over the place right now.
Okay.
This has to be that non-farm payroll stuff.
Yeah, this, and you can see like this is all reaction to the non-farm payroll coming out. It's right now the report is now out. It's 30 minutes past the hour.
Euro CAD trade worked out.
Euro CAD. Here's the Euro CAD. That's bottoming, coming back down. Here's our announcement. It's breaking down. And here's our blue line that we drew. Let's see if it goes down to that before this announcement's over. That's a target area. Let's see, Euro. What was the other one? We had the Euro
yen.
Somebody looking at it. It was a CAD Swiss was one. Again, this is all news based. This is all the effects of that news announcement that we had.
Isn't this fun? The Euro Aussie is insane right now. Absolutely nuts.
There you go, the Euro Aussie here.
Because you had a major price move up, and now it's going down. I mean, it may make a lower low. Insanity move. This is why you don't trade the non-farm. Look at that. No direction. It'll end up basically where it was at the beginning, but
here again, here's our day's pivot low. Here's our day's pivot high from yesterday. Here's our day breaks. And there's nothing wrong with just taking right from that pivot low, pivot high, and because our price right now is in between that. It did make a new high overnight.
You know where it stopped at, Al? Can you guess?
I'm going to guess it's a fib level.
It is a fib level at 58.60. And if you drew a line at 58.60 all the way left, you'll notice that that is the line of control.
Right here. Actually,
across the board.
That's actually the same fib line right here at the 23%. This is our lower 20, right? The 23% retracement right here.
And now we're trying to break below the final red line from our SRV1 tool, which is at 38.36. That's the red line, but it's not going to do it this time, I don't think. That's fun.
Look at
one candle.
The range. Here's the ranges of our target zones right here, and that's that's about 9 pip range. That's it's reasonable. But you can see this one candle, this one. Actually, probably can take it until that's a 5-minute candle. Let's see about the 1-minute candle. Okay, this is for a 3-minute candle range right now. In 3 minutes, this is all non-farm payroll related. That's a 27 pip range in 3 minutes. Look what it was the time before that. Over the previous, like 15 pips over the previous almost another hour.
Where's your RCS meter now? Is it just gone nuts?
We have the
US dollar week across the board.
US dollars week across the board.
That's the key.
Yep, that's the dollar. The dollar is your key.
Brian.
That would be me.
Good. The book Dark Pools, is that pools Pools or Pulls?
Pools. Al, you want to look at some fun?
Sure.
Go to the Kiwi US. I'm putting your momentum tool to test.
Kiwi USD.
Yeah, your momentum pool is being tested. So it said the Kiwi was strong, the US was weak.
Kiwi is the first currency of the pair. Kiwi is strong, and you can see it, and the US is weak. So that means it should be going to the upside. Here's our pivot range from yesterday's high. Here's the overnight low, so we can take that range. It's coming out of this. This is the range. This is going to be the 25% range in this area right in here. When I draw this from here to the low, you see it came up to the 23, wicked up, pulled back, wicked up, then closed, pulled back. Now it's taking off. Guess where it's going to be heading up to? The upper 23%.
It's actually breaking right now the green fib number of 69.84 or 83. So this thing has the potential of going up further.
But this could, if you try to catch this on the way up,
you wouldn't have.
The other thing is
a downtrend. You wouldn't have been able to.
Well, not only that, but if you see this thing starting to break off, you say, okay, I'm going to do a market order. You do a market order. It may take you 45 seconds to a minute before you ever get filled. And by that time, you may be filled way up here.
Or it could have whipped down.
Or it could have whipped down and you got filled. Either way, when you think when things are quiet, you do a market order, boom, it's right there. When you get these reports like this and you get all this volatility, there's a whole slug of orders that are sitting right at these other areas that are sitting there waiting to be filled. And if you do a market order, your orders goes behind that whole queue of orders. And by the time you get filled, because once you do a market order, whenever your number comes up to get filled, that's where you're going to be filled. And it may be 10, 15 pips away. And that's why to try and jump onto these moves like this, you either have to plan it before and be in the trade or have it to where your order is sitting there early enough so that when it does make its move, it gets filled right away. But once the news is out, you're going to be way behind, way in the back of the line before you're going to get filled. And so let me go and draw these.
So far, I'm 1-2, lost 1.
You took 3 trades more than I took today. Templates.
And I love.
Here's our moving averages. You can see there's, well, you know which way you know where the green one is because of this big candle. I mean, this is again, this is probably a 5-minute candle that went 31 pips.
What's strange about the Kiwi US is that the majority of the traders are long. And if you look on a 4-hour chart or daily chart, you would think, why? I'm gonna go, it's really sideways with a bias down. Looking to see what that move looks like on the day chart. It came into a demand zone on the daily chart and it's just reacted to it.
Here's our targets. Here's target 1, target 2, target 3. Again, we have to wait now for this thing to settle in to see where it's going to settle, and before it actually stops reacting to the announcement. You see, like right now, we have about a 2-point spread on the spread right now, and that spread keeps changing too. As the volatility comes in, the spread gets wider and wider. So your entries become less accurate. There's our higher time frame zones. Going to go to the objects list, get the fibs out of there, and redraw the fibs to the other side. So now we know where our direction now is came on up. Again, I'm going to go to the, let's go to a 5-minute chart. We have a 5-minute close above this one. Strong move up. There's a little bit of a basing area. All the strength is to the upside. Looking for a pullback.
That one candle wiped out a day.
And that one candle can wipe out a whole month's worth of profits if you're not careful. And there are people that trade this thing and are very successful trading these reports. I'm just I just never was successful enough to trade it. I'll play with it. I like being here when these reports because I like to see how the methodology would have worked in the process. I just haven't got the confidence enough to trade these.
Okay.
They have a whole set of rules all of their own. And here's our retracement area. Here's the high. Take it over here right to the high. I'll bring it over just so I don't get those Fibonacci so close. But here's a retracement back down. I want to see it come back into the 23. It actually did come up to the high, came back down to 23, formed a little doji there. Now, if we get the break above this orange area and get a close on a 5-minute, then we could be looking at the possibility of this upper 25%. And the target zone from this little pullback at the 23 level would bring us right up here to this little area right up in here, which is right about in. Let's get this out of the way. We should be right in this area right in here. There's the 23 to the 38. And then usually I'll do is when it just sort of wicks down, just tags it, I'll bring this down to about halfway and see if it comes in. And look if it comes into that shaded area. I would like to see a close, a 5-minute close above this orange line. And right now we're on a 5-minute chart, and we still have 3 minutes to go. Questions?
I'm good here.
That is a strong move.
Yeah. But you can see, like I said, you can see that this report is not totally limited just to the dollar, because the dollar, like I said, the dollar has a lot of effect on the other currencies. There's the New Zealand yen. Obviously, it has some effect on New Zealand. New Zealand yen, look at the move on that one. New Zealand CAD, look at the move on that one. How about the S&P? Let's take a look at the S&P. See what it did with the S&P. Look at the move on that one. Look at, these are the zones we drew earlier. These were the blue zones that we're talking about with the fib zone. Look where it came up. Came up within, well, let's see, this is what time frame is this? It came up within $1.25 on the S&P.
Does that affect the what do y'all call it? The German 30?
German 30, I think it probably did. Not as much. Not quite as much. German 30, where's the blue line on German 30? Let me see that. I think I have it here someplace.
You need me to tell you what it is?
You can, yeah.
Okay, you're talking about 15-minute chart?
Yep.
Okay. Your blue line will be sitting at, oh, I don't have that tool. It doesn't mark it on mine.
Okay, I can.
But I can tell you that price, I did my price points last week, and price came right up to the 15,710. 15,710.
Yeah, 15. Well, let's see. Maybe make sure I'm on the right chart here. Yep, 15.
That's amazing because I haven't looked at this. And
15,695, call it 15,695.
Is where the blue would be?
That would be the red line, actually.
A red line?
15 minute. 694.90, I think is what it is.
64.90.
Right. This would be a. I'll just make it blue since. These are things that we have available on TradingView if you use TradingView.
If that's the case, if you called, what did you call it? 66.94? Is that what you said?
And then the 5 minute, hang on a second, the 5 minute line is going to be 15,708. Uh, 15,708. 15,708. Let me double check that. 15,708. 700.8. And this would be, we'll look at this one, a dash line there. You can see right there, that's the overshoot. That little dotted line, that's the overshoot of the major line.
Wow.
But like I said, we're looking at this little zone right up here.
It couldn't close above that red line then.
It couldn't close it when, plus you also have the zone. It couldn't close above. This was the red 15-minute line. But like I said, these are all 64. Well, actually, these lines are probably a little different because of being indexes. The zones are $42 zones in between. 15,652, and then let me show this 15,652. 15,6. $15,652, we're going to call it. I'm going to make this one thick. This is our 15-minute zones on this German 30. Now there's a little bit different than Forex, but it all still comes down a lot the same. And the next zone down below would be right here at the 100 extension. So this is the range that is, there's the overshoot up here. That's the next smaller zone overshoot. Here's the bottom. You can see where the overshoot is down here. I'll do that. Here's the zone. There's a little overshoot here. There's less than 23. It's probably about 11% of the overshoot, which is right about there. Comes right down to that. And this is the range it's in right now. And again, this is all Fibonacci. Here's the low. Here's the pivot high. Here's the upper 25. Lower 25. There's our new playground. And then we go to the lower time frames to see if we can find the trending out of that area into the target areas. And you can see this Fibonacci is right here, right by the 50%. I'm gonna make this one orange.
Let me get a quick glance at your RCS again. Now that we're sitting 20 minutes, we're still Kiwi strong and still Euro US.
On all four. Dollar is still weak on all four. So Kiwi to US still trades the strength of the Kiwi.
That's what I want to know.
And so we go to the Kiwi US.
I'm going in.
Kiwi US right here.
It came to a price point that I liked. We'll see what happens.
Here's my zone. See where it came up right to zone? Look at it, pulled back again. So you can't make this stuff up.
Yeah, and I just got in because it's at a certain price point. That's probably more my aggressive entry. My next entry will be at the 69.70.
Which is right down in this area right in here, the shaded area. Again, here's our, let's see, where's our fib line here? Here's the high. Let's take it on up to where the high was. Here's where the start of the move was. Let's see, let's take this one. Since this did make that was our target high right up in here. Bring this down to our 25%. Here's our middle zone. I'd like to see it pull back to this area right in here. This is a nice little pullback. It's past the 23, working on the 38. Here's my 50. This is our zone to enter on the pullback. Moving averages are still good. Let's go to the 1 minute chart and see what we have. Here's our high. I'm just going to bring this back down a little bit so we can to the orange line here, just so we can see this little gap here. Here's our 50%. See how far it's already qualified for the pullback. Now the question is, if it pulls back, it did make this, this thing closed through all three of these zones. Came up, didn't quite test the upper 25% zone on the higher time frame, which we had. And my guess is there's probably a lower one over here to the left. Here's the high. Here's the pivot high. This was yesterday's pivot high. Here's where it came in after the announcement. There's our top trend line. Got rejected. And now we're just looking to see if it comes back down to give us a little bit of a wedge up in here as this thing, as we have this orange zone is right now trend line. You have your upper 25% zone here.
Love that 15-minute.
It came back down into the middle, right into the middle of this middle zone before it came back up. So it still has room to the upside.
Just like our RCS tool said.
Just like the RCS tool said. Wait for you get the pullback, get in on the pullback. Again, you have to be careful with such a strong move up. Now, oftentimes with these announcements, you'll get a strong move up, and next minute it goes strong move down and whoops you all right out. But
well,
now
we're nearly 30 minutes past.
Yeah, we're 30 minutes past. So now it's starting to stabilize, but it's also made the high for the day right now.
But I love who's in control of that 15-minute candle. Buyers are in control.
But now the question is, you're coming up into the upper zone. How far up do you want to come up to the red? Possibly. Is there enough room? You've got 10 pips. And I think the Kiwi US, I think you have a little bit different price point on that with the calculator. Let me see if I can.
Well, where I got in, my target is literally 1 pip above today's high. I mean, it's not going very far.
This is New Zealand USD. New Zealand USD.
Can you show that calculator?
Yeah, I'm pulling it up here.
That would be interesting to see too.
So it's a $10. It's a $10.
10 per pip.
Yeah. Let me move this thing over. Here's the calculator.
You were showing RCS. There you go.
And so here's the New Zealand USD. Now you can see that the standard value of the USD is 10. If you come over here and look and let's say the Euro Aussie, you see that's the standard pip value of $7.09. The Aussie New Zealand, $7.17. Aussie Swiss, this is up to $11.25. So and these are all based on what the standard lot size is, what the value is. So if you have an account, so again, if your account is, say it's you have a $1,000 account, and you're going to risk 2% on the New Zealand USD with the standard pip value of $10, you risk 2%. You're going to be risking $20 with a 10 pip stop. If you move the stop to 40 pips. Now take a look at this before I put this button. Right now with a 2%, with a 10 pips, I'll put this back to 10 pips. With a 10 pip risk value, you can take a lot size of a 0.2 value. Now, if you go to a higher stop, this is basically your stop. How much room do you have for your stop? If you go from 10 to say 40, you're going to see that 0.02 is going to drop significantly. And you go to 40, now you're down to a 0.05 lot size. For the same risk, that means you can absorb a 40 pip risk, a 40 pip stop, and only risk 2%, but your lot size has to be much smaller. So what we're doing in this room is we're using not a 40 pip stop, but we're using like a 15 pip stop is pretty typical, and 2% risk, maybe sometimes 3. So and we're going for 7 pips. So in order to get a 1 pip gain, a 1% gain, which would be $10 in this case, I could do a 0.13 lot size on a $1,000 account. If I go to the, let's go to one that's a little bit lower, the Aussie New Zealand. If I go to an Aussie New Zealand with the same risk, you'll see the standard lot size is going to change. or standard value is going to change, and your lot size is going to probably get bigger as well. So if I go to the Aussie New Zealand,
Target hit, by the way. I'm 3 for 4.
see with the Aussie New Zealand standard values, now we can take a 1.9 lot size and still maintain the same risk value. And that's how this calculator works. And always we have this little drop down, and just puts down what pairs you want to trade. It tells you what the standard, it calculates the standard value. And like if you do like a cat Swiss, standard value is $11. You can see the lot size drop down again with the same risk, pip risk.
I probably need to go in there and start doing the calculations again for the GE30, but I need y'all's help.
Yeah, and we have them down here for the indexes. Here's the S&P. And with the if you see this little drop down window that just popped up here, you can see like with the U.S. Tech standard stop value with that is we're looking at 100 basically it's a $1 move. This 2 decimal places, but the standard risk would be 100, and you can take a 0.02, and that's probably going to be pretty close to the same for like the German 30. Because generally speaking, what I'll do is with my account, I usually take a 0.05 as normally my normal pip value is about a 0.5. When I go to the index, I usually drop it down to put an extra 0 in between there. That's how this pip calculator works. And then we have this, we have our tool here.
And we can email you also for the pip calculator?
Yes, you can. Yeah, just say you would like the RCS tool and the pip calculator, and we'll get it back to you. We'll try and get back this weekend.
Kiwi US hit target, by the way. I don't know if you heard that.
Which one was?
Kiwi US.
Kiwi US.
Yeah, I'm in and out now.
Okay.
And that means that trade was less than 15 minutes because I got in on the 15-minute candle and out on a 15-minute candle with a 9.7 pip.
And where was your entry on that one, Brian?
Let me see here.
Should have been somewhere right around the 65.80 area or 69.80 area, somewhere around there.
A little lower than that. Let me get over here and look at my actual chart for you. Kiwi was 69.83, which is exactly my fib red line. Well, actually, it's a green line, but when it came back and hit the green line,
so that's pretty much right at the 23% level that we usually use for. Once we take it up, we look for the 23 to 50% range. Here's the 23, and so that just happened to be just above this orange line. There's a 23% line right here.
I would do it again at the same spot, but I wouldn't do it now because there's a pretty heavy supply right above it.
Yeah, we're coming right up into this 23% zone.
And being that this is a holiday weekend, and most bankers are probably going to either take today or Monday off, because us bankers are kind of lazy that way.
Or both.
Or both, yeah.
And a lot of people's vacations are kicking in this week too.
Yeah, they get their time. So what it's doing for me right now is it's butting up against the 69.97 line, which is that's the top of my 23%. That's my zone, how I draw it.
But you can see it no matter how you draw these zones. If you're using the Fibonacci, if you're using the pivot high, pivot low, or if you're using institutional levels, which I think is what Brian's probably using, is a lot of the institutional levels. Those are just prices where the institutions start buying and selling, or they start taking profits, or they start consolidating, or they start adding to their position sizes at these different levels. All we're doing is we're finding out that these Fibonacci zones that we draw oftentimes overlay, and it's sort of like the chicken or the egg syndrome. Which one happens first? Do the Fibs price points happen because of what the institutions do, or is it that the institutions are, or is the Fibonacci range just happens to be at the same spot. You know, it's hard to say, but either way, they overlay each other very closely, well within tolerance of being able to take the trades and keep your stops out of harm's way. Normally speaking, with a 15 pip stop, if we're going for 7 pip, I usually go 2 to 15 pip stop, 7 pip target. And all I'm looking to do is try and catch, we have a 3-section area. I'm just trying to catch one of those sections out of that 3. I always be right. So then you can see this thing starting to pop back up again.
Can I show my screen so I can show them what
Sure.
the institutional stuff looks like?
Sure. I'll stop sharing.
And let me,
And so we're just about out of time here, but we can go in a little bit. I don't think anybody's coming in behind us, I don't think.
Let's see, share my screen. Here we go. Okay, so I have all my tools off except for my fib retracements. I wanted to keep them there. So we talk about price points like this. So I have no tools and I can do this, but I can know by having where these are at. I know the price point. So where I have my green zones, these are where I normally be buying. And there is an overlap. Once it breaks above the 0, this can turn to green. That's what I did. It came back down into here. That's when I went long, and we're hitting this 23 area right now. So it's an ebb and flow. I would figure we would have some resistance in this area and probably resistance up in here. So when I come and unhide and I just show everything that I've got, it tells me everything I need to know. It came right up into the zone that I had. Again, this is not arrow. This is a supply and demand zone tool that I use. But this blue line, so if I remove all this stuff, to keep it simple so you guys can see what it is. And you'll understand that Al and I are not far off. It's basically the same stuff. So if I were to, when Al's drawing from a pivot high to a pivot low, trying to find his range, I don't do that. What I do is I let this tool, which we have on TradingView as well, automatically plot institutional fib numbers. And so what he'll do is he'll find his pivot high, pivot low, and then he'll draw in zones. What I do is I take my institutional and my retracement and I pull from line to line.
It saves a lot of work that way.
It saves a lot of work, but it's also a time thing. It's also me not being subjective on what high do I want to use, what low do I want to use. It's very mechanical. So it's very boring in that respect, because if I'm looking to be short, if this thing flips, this is a great opportunity for me to be short. Why? Because I know that I have a tool here that's odds enhancer that tells me this is a strong move. Same thing with this one. These are definitely, if I'm going long, these are places I want to make sure I'm out of before I get there. Now this one's orange. That means it's already been penetrated. This used to be pink. It's orange now, which means you can see back here, it's already been hit. This one does not seem to be one that's going to stop it a whole lot. It may slow it down, but this 30, look where it stopped at. That dotted line right there is exactly the same as the 38. And you can't, you saw me pull. It's exactly where I would expect it to hesitate. I would also expect it to hesitate at the 50 and 61, but it may not hesitate much because there's really no supply and demand back there. That area right there. If you notice back here at this candle where it stopped at 70.21. If you look at this blue line right here, it's 70.21. So historically, 70.21 obviously has done something. And so that's all it does, is it does the work for me. And I don't have to think so much. So when this price busted through this green line, it's not where I wanted to take it. But when it came back down into here, that's when I took the trade and then got my 7 pips. So basically, what we've done is we've mathematically divided price into 3 zones. And you could do it this way too. It's kind of probably more what Al does. I'm just a little bit more impatient. So I make the zones a little bit smaller. And I do this on the swing trading too. It's the exact same thing. So it looks like that. Doesn't change it a whole lot. Basically, you're surrounding the 61. It just kind of breaks it up into different. I would be a seller up here or very cautious and be a buyer down here, which is exactly what we're knowing. I just like to shrink it up.
And when you see where like a green line is close to where that 38.2 line is, that's a zone right there. Where if you have the Fibonacci traders are going to be using 38.2, the zone traders are going to be using the green line. Either way, you're only a couple of pips away from each other.
Right. And that's what I'm saying with Al's system in mind. We're only a few pips away. It may mean not getting filled or getting filled, but the system's still the same. He's just doing it manually. I'm doing it mechanically. That's all the difference is. So if you like to draw lines and you like to really dig in like that, there's nothing wrong with that. I'm not lazy, but I work hard, but I'm lazy when it comes to charting. I'd rather have it all done for me and then let me analyze. So the tools are there on TradingView. That's why Al asked about TradingView. I'm using it on FXCM.
But we do have it available on TradingView. That's
right.
And I do use it. I just only show the screen just because I can only show one at a time, and it just keeps things a little bit more in line with what I'm assuming that most people have that they're using. But those of you who have TradingView, we want to give you that opportunity to utilize your platform with some of these types of systems here that we have.
Yeah. Can you look up the Euro New Zealand for some?
Just doing that, and I'll keep
awesome.
Yeah. Can you tell me, Al, while I'm looking at this, can you tell me what the strength meter is showing on the Euro Kiwi?
Euro Kiwi is strong all across the board, and the Euro is in the bottom three.
So I assume that it's going to be. I would assume that it's going to be down, and it is. So, for instance,
Euro showing a little bit of a pullback strength, but nothing that's going to. It looks like the Euro's in a little bit of a pullback, whether New Zealand's in a little bit of a pullback, but it still looks like it's got the momentum to the downside.
Yeah, so I would just do it like this, and I would go ahead. And do you believe there's a momentum to the downside on it? Is that what you said?
Yes, strong momentum to the downside.
So I would come in here, and I'm not doing a proper position size. I'm just gonna put it on here, so just to show you how fast I can put it, and I'm done. So why did I take it short? Because I'm in this upper portion. Now, could I have some heat all the way up? Absolutely. Absolutely. But I am in the zone. And most likely what I would have normally done is broke this down. I do my drawings on the 15-minute, but I wanted to get in here since it's a demo account and show you, okay, so what it's saying is I followed my rules. I'm in the upper 23%. Where do I want to expect to bounce? Well, we're going to bounce at this blue line, which it's done it twice, but my target's before that. So we'll see what happens. I also have this nice red line, which is considered a strong resistance line. I don't love the spread on this thing, but so, I mean, it's not great. It wasn't a great market entry. I would much prefer it around the 69.54 area, somewhere in there. But I got in there for the sake of time, and since we're close to time ending. But I would do all my drawings on the 15 and then drop it down to the 5 to see what else I really have. And it may have talked me right out of trading it. Nah, not really.
Keep in mind, Brian, the Euro New Zealand, the standard value is $7.17.
Yeah, it's a little bit lower.
You can take a larger lot size.
And I could also increase the risk or not risk, but increase the stop as well if I wanted to, instead of 15, if I know what my percentages are. But looking at it on a 5-minute, I'm okay with it where I'm at. I would have preferred it a little bit higher up, like I said, 69.51. But I'm okay. This is a potential loss. Where it bounced right here, I would expect a hesitation because once demand becomes supply, or what was once support becomes resistance. Same thing with this one. I would figure that this would be once demand, it's already come back, touched it here and fell away. So this one's probably going to be, I've got a few walls in my favor, but I would expect this one potentially to be a loss. So let me do this real quick. Slide this over a little bit closer.
Well, if you're going short with the New Zealand being strong, you should be okay still.
I am short.
This should just be a pullback.
Should be a pullback, and the question will be coming down to the distance of my.
If you can break through that green zone, is your target on the other side of the green zone?
Right here.
Oh, so right in the middle of it. Yeah, you should be okay. You should be okay.
The problem is the heat here.
Yeah. And a lot of times with that, I try and keep the stop above the moving averages if I can. And if it starts changing direction I'll take it out myself rather than let the stop take me. But that's a individual trader's choice.
I'm
How
gonna
you
go
want
up to
to
the
do that.
orange. I really see this as this. This is what I see. I don't normally do that. That's a big risk, but I have a feeling it's going to go. I don't know this pair real well as far as how it operates, so it's a little bit weird. So I got this nice resistance line happening. That's my first wall. I have the resistance line, the 15-minute fib line, sitting at the same point as our moving average, the 13, which is good in favor. Algorithmic trading. Looking at it, really, I would want to be out before 69.70, which is probably 15 to 20 pips ish.
Now, keep in mind, if this is all sounding a little bit confusing, be nice to yourself and don't beat yourself up because you don't understand it. But as you come into this room day in and day out, and you start seeing how we use these things on different charts, it'll start making sense to you. But right now, it's like going into a room where you're learning a foreign language, and you just have to be patient enough to where your ear starts to understand what's being said, and you understand more and more of the language. And this is going to be no different. This is a language of technical trading, and we're basically showing you the same thing different ways, because different people learn different ways. So we're just trying to address both those different learning patterns. But you'll see that we're not really doing anything different, but we're using some little different tools to say the same thing. And it says, the more you're in this room, the more you follow us, the more you understand it, and the more it'll start making more sense to you. But
and I said the 69.58 was a key point. Now, I would do a pivot from the pivot high to the pivot low. It just so happens that's exactly the 69.58 area. So if it breaks and closes above the 69.58, I'll go ahead and close out the trade. If it closes above this yellow moving average.
So,
yeah, that's what I'm going to do. I'll close it out based on taking exactly what Al does, pivot high to pivot low, measurement off of the Fibonacci. It's all mathematics. And just know this, guys, inside of what we think is chaos is actually well-planned order.
The institutions know what that order is.
They know exactly what it is.
We just try to follow, like I said, we're just pilot fish underneath the big fish. So with that, I think, Brian, we probably could wrap this thing up today.
Yeah. And we'll see what it looks like on Monday.
And well, we're not going to be here Monday.
Oh, on Tuesday. What it looks like
on Tuesday. So anyway, again, we thank everybody for coming into this room. We appreciate every one of you. Have a safe weekend. Enjoy the time with your families, and we will see you not Monday, but we will see you on Tuesday.
Wonderful.
And
Al, can you and I meet again?
We can. 888 right after.
That sounds good.
Okay.
Sounds good.
And we'll talk to everybody later. Have a safe weekend. We'll see you, everybody.
God bless everybody. See you soon.
Take care. God bless.